Hi, welcome back to Fund Flows Insight. I'm Jeff Turnahoy. For the week ended March 16, 2016, we saw some interesting flows activity. We saw one group that hadn't seen inflows in a long time suddenly get a little bit of attention from investors, while another group that has seen inflows for much of the year suddenly get large outflows. Let's take a look at our macro groups and see what the big picture tells us. Starting off at the top, equity mutual funds suffered about $4 billion in outflows. Taxable and tax-exempt mutual funds both took in some pretty good money this week. Money market funds, however, saw something vastly different. They had outflows of $36 billion. Well, turning our attention back to equity funds, it was a pretty good week for the market overall. In fact, they've had 2 out of the past 3 weeks solid and another one at least positive. So there was some momentum for retail investors to get behind, but they couldn't grab that. Instead, despite the good news in the market, they drew money out again. But they were fairly different about how they withdrew their assets. This week, domestic equity funds suffered outflows about $1.6 billion. Non-domestic had outflows of $2.4 billion. That's a little bit different from the recent past, where investors tended to pull more money out of domestics than non-domestics. Looking at different categories, large cap core still suffering the wrath of investors' outflows. Saw the biggest this week, about $1.7 billion withdrawn from them. Investors did not like what was going on in emerging markets. They also withdrew about $1.2 billion from that group. The only areas that had some decent inflow numbers this week, managed futures in our alternatives category, had inflows about $157 million, and small cap value funds actually saw inflows to about $120 million, so fairly light inflow activity where we could find it. That was a little different from equity ETF investors. They got behind the market rally. In fact, may have been responsible for driving part of it. Equity ETFs saw inflows of $1.7 billion this week. Much like their mutual fund counterparts, they bailed on a lot of the non-domestic areas. They got out of the European region ETFs, withdrew about $1 billion from that group. Healthcare was also something they didn't like with all the poor headlines about Valiant out there. They withdrew about $800 million from that group. And financial services also was not looking too promising, with outflows of $651 million from that group. The leader when it came to individual ETFs was SPY, naturally. They saw inflows of $3.2 billion, while QQQ, IVV also saw fairly good inflows this week, but well behind those totals. Spider Gold, which we talked about a few weeks ago, having ushered in $3 billion in the course of 2 weeks, saw only $93 million trickle in this week. Of course, gold was also off about 1.4% on the week, so that was reason enough to take a pause. Let's turn our attention now to taxable fixed income funds. We saw here 4 weeks of inflows now out of 5 positive weeks of performance. So there's some momentum behind taxable mutual funds and flows from investors. The interesting news this week was loan participation funds taking in $34 million. Although small, it's one of the biggest turnarounds that this classification has had after 30 weeks of outflows and over $20 billion withdrawn. Now, if we look at later on, we'll look at loan participation ETF investors. They've been making some inroads in this area, but mutual fund investors have taken a long time to turn around. The group now boasts 65 basis points in total return for the year, so maybe that's reason enough to start thinking about loan funds again. Let's now turn our attention to fixed income ETFs. Much like the taxable bond side, they also had inflows, $2.9 billion to the good this week. High yield and BBB corporates were the recipients of most of this largesse. Short maturity treasuries, they didn't look so appealing. They saw the bulk of the outflows this week. So mostly it was just 2 different views of the market by investors who wanted to take a little more risk, felt more comfortable with oil prices now over $40 a barrel, and they had to get away out of the safe play this week. Let's turn our attention now to municipal debt funds. Here, they also saw inflows, $676 million, not too bad. The performance, though, was rather flat. It wasn't bad, but it was flat. We saw the 10-year Treasury yields fall this week, which was a nice sign. The Bond Buyer 40 Muni Index had fairly flat performance, just like mutual funds. It was down about 2 basis points to 408 basis points for the week. Not a whole lot there to cheer about in terms of total return. The largest recipients of flows this week on the muni side, high yield muni, of course, taking in the leaders' share, the lion's share, I should say, about $214 million. General and insured munis were not far behind, about $108 million for them. Well, the last group we'll take a look at is money market funds, and that $36 billion outflow looks pretty significant. And it does come in 20th place for all-time outflows. So what caused this week's sudden departure? Well, there are probably a couple of issues. No, number one, we did see some pretty good inflows into the equity market this week by ETF investors. So we can imagine that institutions were also trying to get in on the act. It's also that time of the year where corporations are starting to pay out bonuses. So there may be some seasonal effects as well. But $36 billion in outflows, not a significant number for this group. They're used to those kind of figures. Now, if we break it down, we saw retail investors withdraw about $2 billion. The rest, about almost $34 billion, was from institutions. Or if we slice and dice the data differently, we saw tax-exempt money market funds with outflows of $1.8 billion, prime money market funds with outflows of $19.5 billion, and government and treasury money market funds with outflows of $14.5 billion. So add it all up, $36 billion pulled out of cash accounts this week. Well, please join us next week where we'll take another look at flows into and out of mutual funds and ETFs, and certainly join us online at www.lipperusfundflows.com for any other information you might be seeking. Please join us next week. Thanks for watching.